Hello everyone. I'm still your coach. I'm Sean Yeni. So in our last lesson we talked about market structure, whereby we talk about the four concepts in market structure. We talk about the impulse and correction, chart patterns, in which we focus only on double tops and double bottoms, and support and resistance. And then last we talk about trading sessions. So now in this lesson we are going to focus on entry strategy, how we are going to enter market. So it will include the concept of our last lessons and also additional concept. So we are going to consider these six concepts for us to enter a trade. What is entry strategy? It is a predetermined plan outlining the conditions under which a trader will enter a trade. It helps to manage risks, reduce emotional decision making, and increase the likelihood of profitable trades. So, a well-defined entry strategy ensures that traders enter the market at opportune moments, maximizing potential returns while minimizing losses. So, now we now be considering these six concepts. Number one, let's consider impulse and correction. Like I already explained in our last lesson, an impulse and correction, something like this: a very big impulse, then a little correction, then another impulse. Therefore, before this impulse, another impulse is created, we need to enter at a correction. So therefore, in this strategy we are going to enter only at corrections. So take take that and let it stick to your head. We enter during corrections. So that's for impulse and correction. Now um instead of looking for all this structure, impulse and correction, double patterns, support and resistance, I've made this strategy so easy for everyone, whereby we will be using an indicator, just one indicator for this strategy. So I'm introducing an EMA. So EMA is just like a trend, a trend how will I put it? It is a trend indicator, whereby it will tell you the trend um of a market. So we are going to use two of these. Okay, a better scenario for this now. You're going to have a two, I mean 50 EMA above, and then 200 EMA below. Let me give that a label: 50 EMA, then what the 200 EMA. So anytime you see 50 EMA above, 200 EMA below, that is an uptrend. So what does that tell us? It means that we are going to look for a buy setup. So you now be expecting market, when you see market moving like this, then coming down to give us a correction. Like I said before, I told you that we are entering at correction. So our correction, the time we enter is when the market now crosses the 50 EMA. That's when we will be looking for a buy setup. But that's not enough. We will also be considering the support and resistance. Now, in a simplest form, we are not doing complex thing with the support and resistance. We will just be using rounded values for our support and resistance. So what is this rounded value? I believe I've explained this in our group before, but let me give a quick example. Rounded value is just a psychological level, a kind of rounded level. For example, if you have asked a millionaire that what is their net worth, they are not going to say 2.5 million or 2 point something million, 500 and something. No, they are going to just use a rounded values. I worth 25 million, I worth 50 million, I worth 100 million. So those are rounded value. So the same thing in trading. Banks and hedges uses this kind of psychological numbering as a way to take off their profit or to enter trade. So same thing we are going to use here. So anytime we want to enter, we are entering at rounded levels. So what is this rounded level? Just place your horizontal lines at anywhere um in your chart close to your entry, or you can even draw it down. I will explain that when we get to proper setup. So now, placing your horizontal line, double click it, get to your coordinate tabs, then first remove the decimals. Now the rounded level, for example, this is US 30 and the rounded level for US 30 is just 2 digits. So remove that 2 digits and replace it with 00. So we've rounded that. So we now have rounded values. Therefore, you can also draw more than one. You can draw below in case that one is not respected. You look for another rounded levels. So what is this? We have 200 above. That means we need 100 above. Remove the 2, replace it with 1. We have 100 above. You can also drop to the top. So but I will stop that for a quick explanation. So now what we'll be now waiting for, after it has touched or crosses 50 EMA, we will also wait at rounded level. So our first rounded level, if it now touches the rounded level and crosses, or even cross below a little, not too much, then crosses above the rounded level. Now after closing above, you now set your buy order. So alright, so your buy order, so for the hope that the market will now continue the impulse. So that's for a buy setup. Now let me give you a scenario for a sell setup. So the same thing for the downtrend, we need to have 50 EMA like this. Let me redraw that. 50 EMA like this, then 200 EMA follows. I'm not good at drawing. 50 EMA follows. So therefore, if you have 50 EMA below 200 EMA, it is telling you this is a downtrend. Therefore, we are looking for a sell setup. So we now be expecting market. When you see market moving like this, then with a correction, like I said, we are entering at correction. It must touch our 50 EMA or cross above our 50 EMA, then find the nearest rounded value. So getting to our rounded values, you see it cross or touch the rounded value, then must cross again, like close below. So after closing below, that's a valid sell setup. Therefore we enter the market, we go for the sell. So that is I think this is very 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 simple. So let me now talk with I've talked about the impulse and correction, support and resistance. The support and resistance are our rounded values. So now we have double top, double bottom. What's the problem with this? Actually no problem with this. Double top, double bottom is just for us to it's just a protection for us to avoid too much losses. Now when you see market like this coming like this and form W pattern, this is an example for downtrend, and form W pattern and now is now giving you an entry, like I explained, this is no more a valid setup. We are not going to enter a trade. We are not going this W pattern. We are no more going to enter. We need to leave it and wait either for the market to now come to cross and give us another setup, because there's a probability that when we have this, the most time we are going to have this and continue, and when you enter a kind of trade like this, that's a loss. I hope you understand. So that's the importance of double top and double bottom in this strategy. So let me delete also an example of an uptrend. For an uptrend 200 above, 50 above, 200 below. So for an uptrend, if you see something like this, just watch out. Something like this M pattern, now it's now giving you a kind of fake setup. You cannot enter, you can no more enter. Just leave the market, wait for the market to either cross. You have already have M pattern like this, just wait for the market to cross and give you another setup. Maybe there is another rounded values here, just find another rounded value. If you touch that rounded value, fine, you go again. If it doesn't, just leave it. So that is the usefulness of double top, double bottom. Also, one more thing, I added trend line. The importance of the trend line also is also for to protect us from entering fake setups. So you may have something like this, market is growing well, now giving you something like this. If you have a very clean setup, a very clean trend line like this, do not enter the trade. What did I say? Do not enter unless we have a very strong one now come like this, or even go higher. There's a proper an high probability that it will give you a good support. As you are a beginner, let me just keep it simple like this. When you have this kind of trend like this, leave the market. Don't trade unless you wait for this trend line to break above. When you now break above, give you a new setup, you can now go. So the same thing with a downtrend. Once you understood this one, it's the same thing for a downtrend. But let me just I think I've explained impulse, double top, trend line, support and resistance. Okay, the last thing in this before we go into risk management is trading session. Therefore, our entry we must always be, because in this strategy I will be giving you US30 to start with. So therefore US30 is for New York session. So we will be trading this in New York session. I will show you the time of this trade. You can also search Google, what is the time forex trading session in Nigerian time. If you are in Nigeria, I'm in Nigeria, so I know the time. The New York is always 1 p.m. So you can confirm it on your own. Search Google, and I will also show it in this video, or link it in this video. So what next? I've explained that. I think I'm done with that. So let's now go to a proper live market to give you an example. Alright everyone, so let us make this part 1, and we'll continue in part 2. So click on the next button or select the video that's showing at the right corner to continue in part 2. And don't forget, remember, practice makes perfect. Keep learning and refining your approach to become a more successful trader. Thank you for watching this tutorial on entry strategies. If you found this helpful, please give a thumbs up and subscribe to my channel for more trading tips and strategies. Feel free to leave a comment below with any question or feedback you may have. Until next time, happy trading.